So I think when you own a business and you're incentivized to make it work, you really sit there and get to know everything that's going on in it. And I think that's always like having a deep understanding of the customer. And in financial services, it's so much more complex because to take a simple action, there's like 7 different parties involved. So to really build great technology product against that, you really have to understand the psychology and the incentives and the behavior patterns of all of those parties at once.
Welcome to another episode of the Unicorns Podcast. I'm your host, Justin Kelly. On today's episode, we're diving into one of the most exciting new ventures in wealth tech, a company called Xynon. Founded by Shantanu and Wes Hall, Xynon has set out to rethink how financial advice platforms should work. Rather than starting with the registry like most incumbents, they've built from the broker infrastructure layer up, giving advisors real-time compliance, seamless trade execution, AI-powered reporting, and far greater control. Their mission is clear: empower advisor-led firms under $1 billion in assets, the boutiques and mid-tier practices that have often felt underserved by the big players. With Morrison Securities' execution capability integrated into the platform, Xynon is aiming to reshape the $1 trillion advice market here in Australia, with global ambitions on the horizon. Joining me to share the story of Xynon, Shantanu and Wes Hall. Gentlemen, welcome to the program.
Thank you, Justin. Pleasure to be here in all the bright lights.
The bright lights. So, you've just launched Xynon. SJ, I'll start with you. How does it feel bringing something new into an industry that is dominated by some big incumbents?
Well, it's definitely exciting. It's certainly, at least my background, on the background of my fund Beaconsfield, that we've always liked attacking industries where there's some great business models, but the opportunity to do something where you can piece together lots of different areas of technology that haven't really been pieced together before and offer something really new and differentiated. So I think it's the right time because there's been lots of new technology developments at a few different levels that I think if we can really weave them together in the right way, we can create something really interesting in this Australian financial services market, which is a huge and very underrated one, I think, from the global perspective.
People often talk about an industry that is ripe for disruption. Mm-hmm. Would you categorise the financial services industry and what you're bringing to it as a disruptive force, perhaps?
So I've never liked the language of disruption and aggression and competition in these cases. Mm-hmm. I think there's an opportunity to bring some new things into the ecosystem that can really add value ultimately for the beneficiaries of wealth management, which is substantially every citizen in the country. And in that context, again, I think disruption really isn't the right framing. You know, we may be working with a lot of existing players. They may find some use in our technology. Probably there are a couple existing players we might compete with, but I think that's very incidental to trying to do something novel.
So when you describe to others your new business, mm-hmm. what Xynon is or does, how do you go about doing that?
I think it's the very simple framing is that we're trying to build infrastructure, technology infrastructure for investment managers and advisors, particularly that segment of advisors who are interested in taking on more of that investment manager role, which I think is a salubrious thing in general, that advisors are focusing not just on offering a generalized service, but in generating returns for their clients. Because at the end of the day, for all the intermediation that happens, that's where the value is generated for people in the end. And if there is something to be critical about in the Australian financial services system, which again is one of the best governed in the world, and you know, ASIC, people have their complaints. People always have complaints about the regulator. It's part of the relationship. They have to be adversarial. But I think in many cases it's more of a model for other countries rather than being something to be excoriated. And, you know, in that context, I think one thing we can complain about is the fact that, at least on most monies that go into superannuation funds, there's like 200 to 300 basis points, so 2 to 3% every year is going to a wide variety of intermediaries. And that's just enormous, If the difference between 10% and 7% over the course of 15 years is going to be a multiple of something like 8 times, right? So that's something where I think technology and a certain degree of bundling of products together in natural ways can really achieve something much more economical for a wide swath of people. And ultimately, we think the best place for that to happen is really this relationship between the advisor and the investment manager,
Yes.
and how between them they're able to deliver better outcomes in a way that's really adequated and suited to what an individual needs.
I'd like to ask you about Morrison Securities. So why did you start the business by acquiring Morrison rather than taking the more typical tech first, then bolt on a broker route? What was the rationale behind that?
I mean, one really simple thing is just from a financial, from a deal maker's perspective, Morrison, someone who used to be the chief investment officer of Macquarie, and who was one of the first people I met when I came here, he said, they're really just like 2 jewels in that segment of the market, and you can't buy JB Ware anymore because Goldman bought it and Morrison's the other one.
Yeah.
And so there's a deal maker's element of, it's almost like fear of missing out. Like, it's on the market, why not pick it up?
Yeah.
And but I think if I'm speaking strategically, the reality is that in these extremely complex industries, and I always say, and my background isn't like in string theory, so I always say, this isn't string theory and it's not rocket science. It's actually much worse. It's much more complex than that. And so it's a very complex industry. So I think when you own a business and you're incentivized to make it work, you really sit there and get to know everything that's going on in it. And I think that's always like having a deep understanding of the customer. And in financial services, it's so much more complex because to take a simple action, there's like 7 different parties involved. So to really build great technology product against that, you really have to understand the psychology and the incentives and the behavior patterns of all of those parties at once. So owning the business was a great chance to get in and really understand the details of what's going on, understand the value chain, and understand where the right way we could contribute moving forward would be.
Wes, I'd like to bring you in now. You've said that too many platforms start at the registry and then bolt on investment intelligence later. So can you explain what it means to invert that model?
Yeah, so simply the registry is kind of the accounting system, right? And so is it important? Absolutely. But what we think is really important is kind of the end client outcomes and being able to have good investment offers and proposition to that end client. And so effectively for us, it's about how do you put the advisor and the client in control with a great user experience, but also just make sure that you can implement investment instructions at the best time possible, right? Whereas some of these kind of the traditional kind of platforms offers, ones that need to worry about how they group all these assets together to be able to do their end of day kind of accounting process. They're really trying to fit everyone into one size fits all model, and so we see an opportunity, and it's from insights that we've got from Morrison Securities, trading sort of circa $39 billion, I think it was last year in equities. We see the benefit of timeliness and kind of and real time trading, and so we want to be able to bring that to a retail customer base to be able to democratise wealth. You shouldn't need to have a really large account balance to be able to get that type of experience.
So a question to both of you, with that in mind, Wes, what practical advantages does building from the broker infrastructure layer give advisors day to day?
Yes, so it's really about kind of putting the advisor in control. So rather than needing that they need this sort of end of day process, or that they want to really be able to deliver a good end customer experience. And so when advisors are managing portfolios, it can't be that everyone's just in a balanced portfolio, because there's other considerations that need to be applicable for the client beyond normal risk profile and strategic asset allocation. So things like how long have you owned the asset for? What's been the intraday kind of change movement in price of different securities? What does the client already hold? If there are exclusions or substitutions, and so being able to kind of do that at an individual level, but importantly to be able to do that at scale. I don't see that existing in the market, right? And so that's why we're really excited by what we've built and working with the Morrison business, part of the group, has been really important to be able to kind of pull that off.
Yeah, I agree with everything I said about all that. I think you covered everything beautifully. Very
good. So I've seen that there is a layer of AI embedded into this platform. How does that work? Tell us about the AI that is within Xynon. Is it mostly compliance? Is it in execution, client management, or all of the above?
I think when you look at it today, we're not really surfacing a lot of the AI stuff yet. It's a lot of what goes on in the background, especially at that reconciliation layer, where I think actually a lot of historical issues, including this whole hubbub about Shield and First Guardian, a lot of those issues started at this registry and reconciliation layer level in the administrators. So I think today it's not something we're surfacing yet, but I think AI plays two roles. One is in our back end, at this kind of reconciliation layer, which leads ultimately into compliance. That's one place. And then I think the second place is we're uniquely designing the underlying infrastructure to be ready for what are called AI agents. And I think in time what's going to happen is the advisor, the investment manager, they're going to be able to use our agents as agents of financial intelligence, where we're going to give them the ability to much more rapidly iterate through investment ideas, through portfolios, analyze the risk there too. And I think those are the things that are ultimately going to help them drive a much more differentiated and value-generating experience for their clients.
Yeah, if I can add to that,
please.
right? Yeah, so absolutely agree with everything SJ said. And obviously the technology innovation and how quickly you can move, where you're not stuck on technology that's built 20 or 30 years ago. Just the ability to be able to deliver agilely, much more efficient software development life cycles, a big win. But if you think about the end client and sort of the advisor experience we want to get here, you've got the world's largest fund manager tokenizing all their assets in BlackRock. You've got NASDAQ moving to tokenize all the securities on their exchange. And so the world is very rapidly moving to a 24/7 investment proposition. For us, the extension into other global markets for Morrison Securities and our ability to be able to trade in real time on those securities, that's going to be incredible, I think, right? So this ability for the advisor and the end client to be able to have 24/7 liquidity, to be able to kind of the fungibility or the moving of assets between all these different investments, that's going to be tremendous, right? And I kind of look at it and go, well, how are the other existing solutions going to be able to handle that new world? I don't know, right? And so for us, authenticating, KYC, AMLing the clients, all part of that overall kind of client experience. It's really hard to catch up to that, right? And so unless you've got we've done it for online banking, but we like to go into the branch and kind of certify our identity, right? And so we sort of forget about it now, but for wealth, unless you're doing that at the start, it's going to be really difficult to catch up, right? For these incumbents that have sort of caught in this sort of paradigm of analog and digital, right? And so for us, it's a digital model, much more efficient, 24/7 investment proposition.
So let me ask you this: who is your target market? Who are your clients? Who are the end users? Who have you built Xynon for?
Yeah, so we start with the advisors first, and so for us, there's excellent, really loyal customer base, broker clients with the Morrison business. So sort of 65, 70 odd kind of AFSLs there, but it's also for I would say, sort of independently minded, strong investment-led advice practices. And so we sort of notionally said $1 billion in FUM because those groups are generally have a really strong investment proposition, are less encumbered by sort of some sort of institutional overlay in that, and yes. but really deeply care about getting high quality investment outcomes for their clients, and so we're about that. Like how do we help to enable that bespoke real time investment proposition for those end clients, be able to provide things like high quality tax and performance reporting alongside those investments.
So how do you do that? How do you provide a better client outcome?
So it's really about being nimble around investments, not being stuck in this sort of analog, paper based kind of paradigm. Like so how do you within kind of well governed rules and with technology be able to kind of mean that you can implement portfolio instructions really quickly.
And what are you hearing from the market more broadly? What are those firms saying about their frustrations are with some of the existing platforms, the bigger platforms?
Yes, frankly, some are a bit pissed off, right? So for two reasons. So firstly, that they feel like the traditional platforms kind of get in the way of their business. They've passed a lot of the burden of administration back into the individual practice. There has to be, and there is a better way where effectively you don't need all that paper. You don't need the extra work that happens in the financial planning practices to occur, right? A good platform should allow them to do that. And so, and the second one, and it's sort of it's kind of nuanced, but as we know, in this country, a lot of financial advisors, with the banks getting out of financial planning, have moved to smaller licensees. The sort of the number of licensees under 20 authorised representatives has exploded, right? So there's a lot of smaller financial planning groups. So for those smaller financial planning groups, they're not getting the same rate card at some of the platforms now that they were getting before. Right?
So why is that?
Well, they just don't get the preferential pricing that you got with kind of being at scale, right? So I know advisors that were getting a really good rate at some of these kind of these market leading kind of platforms, and they're now they've been a loyal kind of user of these platforms. They now go to these platforms and say, well, how could the rate be double what I was paying before? It's exactly the same investment administration solution. So they're feeling really frustrated by that and kind of looking for alternatives.
And does Xynon solve?
For sure, like it's super competitive, right? Like we're, because we've got digital, we use that, use AI in the back end where appropriate. Like we've got a really nimble kind of tech stack. We're hyper efficient, and we can obviously pass on those some of those cost benefits to the end client and their advisors.
So SJ, picking up from what Wes has said, where do you then think that Xynon can realistically carve out market share?
Well, I think one broad trend we see in the market, and again, reflecting some of what I said earlier, I think this is broadly speaking a good thing, is that you see sort of these two things. One is the case where the advisor is outsourcing the portfolio management to a portfolio manager. And then the other is the case, I mean, it makes perfect sense because the advisor is fundamentally managing the relationship. And if that advisor, it has, the self-awareness to say, my expertise and my time is not best spent on managing the portfolio, but instead thinking about, say, the tax treatment or what each of these 100 clients I have really needs at a personal level. How are they saving to send their kids to uni or this or that?
Yes.
And those are all separate issues, really, from generating returns. So the advisor genuinely has quite a complex job from that perspective. And so it in many cases, it may make sense to have an outside portfolio manager or investment manager for those portfolios.
Yes.
And you see that trend happening now because there's so much going on the compliance side and on taking really good personalized care of those clients that it may make sense to outsource that. So I think that's one case. And then the other case is, and you see this especially at these really well-run practices that have maybe, 5 to 10 advisors. and are managing anywhere from, say, 500 million to 1.5 to maybe a couple billion. What you see in those practices, again, that they're taking on a lot of that portfolio manager remit in a much more sophisticated way. And that often happens when people come to the advice business after leaving the buy side at funds themselves, right? And that is their expertise, that is what they're good at, and they want to deliver that experience. And I think in both cases, these are very natural niches, and we've seen that niche grow really effectively. If there's a CEO in this space I've really admired, it's probably Tim Ewell at Mason Stevens, which recently had an excellent sale at something like a 10 times revenue multiple. And I think that, over his 3 or 4 years at Mason Stevens, the one thing he really did was, again, just focus their business on the model managers. And that did really well because it is genuinely this broad trend in the market. And I think in some ways we are focused on that arena, but I would say our proposition is fundamentally technology-led over everything. We're not one of these parties just repurposing SS&C and FNZ as I think almost every other company in our industry does. And so, again, we're trying to offer something fairly differentiated within that context.
How does the individual investor that has money invested with a fund manager, financial advisor, seeking help, they're using Xynon is being used. Is there any noticeable difference for the consumer?
Well, so we're not necessarily supporting people, or we're not focused right now, I'd say, on people who aren't using an advisor. But I think there's a very natural extension where all these tools that we are offering the advisor and then the portfolio manager, over time, it makes sense to give to a lot of individual consumers who are managing, say, an SMSF. And this again, it fits very neatly into the Morrison context, where people who have SMSFs are a reasonably large constituency base in Morrison. Currently, that's probably more focused on ultra-high net worths.
Yes.
But again, there's no reason that once there's a scalable technology solution in place that can speak to their needs, that we can't bring a lot of this tooling that we currently offer at the high end down to someone who has, say, 500K in their super, maybe even 250, and is looking at opening an SMSF.
Yeah. So is the strategic play here to enable boutiques to compete with the scale and the compliance muscle of the majors?
I think that there's an element of that. That a lot of what we're doing again is, and I think the entire history of financial services and technology in the context of financial services has largely been the filtering down of more sophisticated products and services to broader and broader user bases. And I think it's typically been a very successful business model to do that. By the way, again, I don't think that happens in a necessarily competitive way. I think that you get this greater heterogeneity of companies, and that's genuinely value generating across the entire economy, right? It's not like the private banks have gone out of business. They're doing better business than ever.
Yeah.
Right?
Yeah.
And so, again, I don't think of it as being fundamentally competitive. I think of it in terms of there's a bunch of needs that aren't currently being met, and I think if we speak to that, we're growing the pie for everybody.
Gentlemen, where did the idea come from for Xynon? Where obviously it's a new business, you're just getting off the ground. At some point, you would have thought, you know what, we can do this a better way. We can do this ourselves. I think that there's actually a business in this. Shine a light on what that process was like.
Yeah, that's an interesting question, and origin stories are always, they're always so particular, and it's always so random, and it's always kind of this, there you go, but for the grace of God kind of thing. And so I think in this case, what had happened was that my co-founder in the fund, Beaconsfield, and I'm, and Freddie, we had formed a view a while back, and we're very opportunistic traders, right? Mostly algorithmic, systematic, and then very focused on options and derivatives. And we have differentiated ourselves largely by not being that focused on volatility, right? We are willing to take much bigger risks and undergo much larger retrenchments. Like we don't,
Yes.
we've lived through like 50% downturns that lasted 18 months and sat through it. So that's not something that we think is scalable, right? But it's where we started our first niche. But having been at that very particular end of the wealth management industry and financial services, we were looking sort of backwards through our own value and supply chain, if you will. And we were like, actually, we don't understand anything that's happening at the advisor level. We don't understand what these guys do, right? We don't understand what these guys do. Like we don't understand, how a lot of these other fund managers we see in London or New York or whatever, where are they getting their capital from?
Yeah.
Like where does it come from? And all of this. And so I think a lot of my interest in where's the technology in that area. Why is it seems like it hasn't advanced to nearly the same degree as we've seen, especially in the payments industry, when actually there's a lot more in the value chain in wealth management than there is in payments. Why is that happening? So I think, when the Morrison deal came up, that was kind of a broad question area for us that we had been studying for some time.
I see, right.
We're very, on the venture capital side, we tend to be very thesis driven. We have an idea of this feels like something's missing, and then we are just waiting until something comes along that slots in the right way. And so I think a lot of it was that. And then coming to Australia, picking up Morrison, and maybe most importantly, meeting Wes and his mentorship. Out of all the people I've met in this country, I just I've never found anyone else with Wes's combination of having been at, the most compliance heavy part of the advice industry, at the sort of the leading layers at the top end in terms of the technology aspect, and then having done it in Australia and the UK, and to some degree the US. So he brought a level of experience and intellectual horsepower to this that I hadn't seen before. And so I think that having his mentorship, and then this kind of gradual process where he and I, have discussed this over now 18 months, I think is really what ended up becoming Xynon. We thought very carefully about the value chain and finally said, okay, we think this is a good niche to start with.
Okay. So you've just got going, you're in market, you are raising capital. What will the capital be used for?
So the capital is going to be used primarily for continued research and development. We've got a pretty rich product roadmap and a bunch of things we clearly want to deliver, all of which are adjacent to the things we have. We really, I think, want to beef up that AI research and development side, because I think there are a few things we can immediately surface and immediately give to customers if we just have a little more capital than we currently have. But I think a lot of those things are still very clear R&D efforts, and I think there's a reason AI has not that there are basically no successful AI businesses in any enterprise vertical yet. Because you really, again, and this is why we bought Morrison, you really need to sit in a business a long time to understand the workflows. And designing the AI agents is much like designing any other piece of software. You have to know the use case, and you have to know the psychology of the people involved very intimately to be able to develop. And I think we really want to undertake that journey, and I think we're well positioned to do so if we can find the right capital partner. So I'd say about half of the capital is going to go to that R&D side. And then I think there's some things on sort of the financial product side we can do that that I think would be, again, immediately accretive. Great products we can bundle in with the existing Xynon and Morrison offerings. I think separately managed accounts, a very, very obvious one that would probably require us, for example, to really build out a rich registry of our own, which goes back to the R&D side. But I think the balance of capital will go there. And then I think it makes sense for us to invest something in Morrison as well, which is growing like gangbusters. It's growing so fast. We're having to like fire our customers. I'm not joking. I'm not joking.
Tell us about that.
You know, we've grown like 40% in the past 2 years, and I'm pretty sure we're the only one of our competitors that's actually grown.
Yes.
And you know, the reality is everyone is coming to us because the quality of service you get at Morrison and the level of custom hand-holding you get is something you won't get anywhere else.
Yes.
And so we just have a preposterously loyal client base, where even when they get angry and say they're going to leave, no one ever seems. If any of you guys are listening, we love you. We really do. Don't leave, but we may increase prices.
So you've launched in Australia, and SJ, you've said Australia is just the beginning. Without getting too far ahead of ourselves, which international markets do you see as ripe for this model? Down the track, of course.
Yeah, that's a really interesting question. So I think on the Morrison trading side, we're already opening up in a bunch of different economies that I think a lot of the high-end Australian advisors and portfolio managers already like to trade in. Naturally Canada, naturally the UK. US is the biggest one by far. I think Korea, Japan, and then some of the Southeast Asian economies. All of these become very natural extensions on the trading side. I think when you think about the broader Xynon platform, I think there's probably a natural extension play in the UK. There's no business really like this, or even one like NetWealth or Hub in the UK either, quite like that. There isn't one in Canada. But I think the most exciting markets are none of these. I think it's Japan and Korea. And I think Japan and Korea are particularly interesting because they have a very similar proportion of... They have very similar demographic proportions in a certain sense, where it's an aging population. There's an enormous amount of retirement assets relative to GDP, and there's a growing independent financial advisor base in those economies. So I think something like this may play very well in those environments, especially because, again, somewhat like Australia, they still haven't begun to use technology in that wealth management side yet.
We're almost out of time, gents, but a last question, and I'd like comments from both of you. Let's look ahead. What does success look like for Xynon? Is it market share? Is it advisor numbers? Global domination? I mean, what is it?
So I think we have some well-defined 1, 2, 3 year targets already. I don't think we're necessarily aiming for global domination, but I do think I'd love it, at least, you know, as someone who's a technologist by background, I'd just love to build really, really great technology product in this space. I'd really love to be able to find a way to give a lot of the best tooling that we ourselves have used at Beaconsfield and on the buy side, and be able to find a way to economically offer those at really large scale. I think that would be just an awesome thing to do. I think it would make wealth management, even for individuals, so much more interesting and enjoyable. And I think that if we're just looking in a revenue sense, or really a kind of funds under our platform sense, then I think, you know, short-term goal is to get to maybe 1 billion. 3-year goal, get to maybe 10 billion. And I think these numbers are really, really achievable. You know, I think, you know, given that most of these advisors are managing between 100 to maybe 1 billion, I think if we're looking at onboarding maybe 50 advice groups over the next 3 years, which feels pretty achievable, I think we can hit that $10 billion target, and I think that would be a great business to have built.
Yeah, and particularly given the Morrison clients we've got it already, right? The groups that use it, so so it feels pretty achievable. Yeah. Yep. Just to sort of add to SJ, so I kind of think a bit more about like success and kind of what the roadmap looks like for us. So this whole sort of 24/7, always on, sort of, you know, real time kind of exchange traded kind of solution, extending to tokenization of assets. there's a big prize there for us, right, to be able to start with Australia and build a sort of a global investment solution. But it's also crypto, it's undeniable, right? And so irrespective of your thesis on whether you believe in crypto or not, right, like that, clients demanding it, right? Like I get asked about it so often, right? Like, and so how do we provide, because effectively crypto assets just another exchange traded investment proposition, and so maybe within a well diversified portfolio, the clients can have a portion of their assets in crypto, and so we've thought pretty hard about how we can offer that alongside of a well advised portfolio, and so we think that's pretty exciting to be able to have that, set that alongside.
I think Wes is giving away secret plans.
No,
But we at Beacon Seal we've done a fair bit of crypto, both investing and trading across a wide variety of coins. I think it's an absolutely fascinating market. I think it should probably be a part of most well diversified portfolios. I don't think Xynon as an infrastructure business is ever going to take a view on any crypto, but I think being able to offer scalable tools at the advice level, rather than just what the existing crypto businesses are, which is letting people trade it on their own, but really making it part of a rich financial planning or financial advice product, or rather helping advisors and portfolio managers do so. I think that's an enormous opportunity to be that advice layer, that advice infrastructure on the crypto side. And of course, Wes is perfectly right, very right to talk about the potential for tokenization to really make it so that a lot of the private assets people currently hold, including Australians' favorite asset class, which is property, the fact that we may be able to tokenize that or tokenize the funds that own it, and therefore make those interests the beneficial interests much more liquid, much more transferable, I think that's an enormous thing as well. And I think the Australian economy, again, because it's so highly indexed to property, is actually an economy in which it's unusually important that this occurs quickly. And I think, again, that's something where we're really well positioned to be able to implement a solution.
Yeah, final thing on tokenization is just, or crypto assets, because we're aware of the restrictions that advisors in this country are providing advice around crypto, so we thought about that, right? And so we don't need to say any more about it, but there's a solution there. Yeah.
SJ and Wes, many thanks for today. Great to have you on the show. Best of luck with Xynon. I'm sure it's going to be a huge success, so all the very best in the future. Thank you.
Thanks for your time,
Thanks,
Justin.
Cheers, mate.